exploring how U.S. vehicle tax incentives impact automotive loans and financial decisions.
EV marketers were following Tesla, then you definitely know that the EV tax credit is gone. But whereas that is a negative, we have one positive that I wanted to kind of reignite, because there's not a lot of people talking about this, but it is the incentive, the tax incentive for automotive vehicles, any kind, not just EVs, but any type of vehicle that is made in the U.S. So if it reaches a certain threshold of being made in the U.S., if final assemblies in the U.S., then those vehicles will apply for this tax credit, which a lot of vehicles are actually assembled in the U.S. Even non-U.S. vehicles are actually assembled in the U.S. because it's just a lot more expensive, like tariff-wise, and what else? And overall, just volume of the vehicle, it's a lot more expensive to ship it over here. So there's going to be a ton of different options available to purchase from. So what is this tax credit if you haven't heard of it? Basically, this tax credit gives you the ability to write off interest on your automotive loan. So as you know, most people, I think it's over 80% of people in the U.S. buy their vehicles with a loan, which just makes sense, right? Why pay cash for your vehicle when you can get a loan for it? However, a vehicle loan is actually not a very good financial decision, and I'll get into that here in 1 second. But however, this makes it a lot better. So this incentive allows for a $10,000 credit per year. So that right there is pretty phenomenal, because majority of people are not paying anywhere near $10,000 in interest per year on their vehicle. So this is not only going to be good for the automotive market and stimulating automotive sales, but it's also going to be very good for the individuals, right? Because our houses are our most expensive expense, and then generally it's our number two is our automotive loan. Unless you live in Evansville, Indiana, then it's probably your electric bill. I'm kind of kidding, but not really. We have like utility bills, electric bills, or whatever. They're like $600 a month. So stuff gets pretty crazy for utilities. I pay almost as much for that as I do the Model Y with no interest. But so that's like the one caveat is like also to like 0% interest vehicles. Like you're obviously not going to get that. My Model Y is actually not 0% interest. It's like 1% interest, but 1% interest is pretty negligible. We're probably only paying like maybe $1,000 a year in interest. Now for the Cybertruck, which is probably one of the first or worst financial decisions that I could have made. The Cybertruck is a very good example of something that's going to be a ton of interest. So the Cybertruck was actually very interesting, and really I've almost never got automotive loans. So I'll take you into that a little bit. I've never got automotive loans until like this last year. Everything that I've ever bought has been cash. Every single vehicle I've ever bought. I'm like 33 years old now. Until this last year. And then in this last year, I bought, what did I buy? An Expedition. I bought a Lincoln. I bought the Model Y, and I bought the Cybertruck. Okay. And so if you're wondering why I'm making these terrible financial decisions, it's because we were actually launching another business through like Turo and vehicle rental, which we're actually kind of tapering off. Like we're definitely not growing it. We're definitely not looking to expand. I was interested in like expanding for the sake of like robotaxi to start building out a fleet of vehicles. But there's a few things that I don't like about that business. I'll just mention those real quick. One is you can get delisted from the platform. Like the vehicle itself can get delisted from like recalls and stuff. And so that's pretty annoying that you have like this loan against something. And so it creates a major liability, really, especially if like you had a fleet of like a bunch of the same vehicles and then all of a sudden a recall comes out. And then so you have to remain profitable in that business, then you have to be extremely nimble and like hurry up and sell that vehicle that actually has a recall on it. Most recalls are not that big of a deal, but they're a big of a deal in the sense of like getting you delisted from the platform until that recall can get satisfied. Like for our Expedition, it took them over like 9 months to satisfy that recall, and so we just like couldn't wait 9 months and making a payment on a vehicle, or wasn't willing to at least. Then we had a Lincoln. It got basically totaled, and that's been like a whole nightmare.